Hello, my name is Maria Bezubova and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz. Today I would like to come back to the topic that we've already touched upon some time ago, and this is bulk shipping, the circulatory system of the global trade, which is affected by the global volatility the same way as commodity markets are. In order to unveil the reasons for current status of the global shipping, explain some more and less basic fundamentals of the industry, technologies that are kicking in and changing it, as well as other hot topics, I am thrilled to host a super interesting guest, Mads Frank Markussen, Head of Freight Research and Derivatives at CM Navigator and Navi Merchants. I am happy to welcome you, Mads, and thank you very much for joining me today.
Thank you for having me.
Mads, first of all, I would like to ask you to tell a bit more about Navi Merchants and your role there, because I think things which the company and yourself are doing are just great and will be very helpful for everyone who will be watching this.
Most definitely. Also, I think a good way to start is actually a step above. The group I work for is called Copenhagen Merchants Group. It is a Danish commodity company which is engaged in multiple different commodity industries. I work for the ship owning part, Navi Merchants, a ship owner in the classical sense. Then we have a grain brokerage, the original business called Copenhagen Merchants with offices in all over the world, Dubai, Brazil, you name it. We have terminals and ports all over most of Baltic. We own parts of a biomass trading company with factories in the US, and we have a agency business for ports. So we are quite, let's say, full value chain company, because we also own parts of a protein processing factory here in Denmark. Now, for your, let's say, customers, or for the people listening in today, my experience comes from freight trading. I was a freight trader for 10 years, most notably with Louis Dreyfus in Switzerland. Also back then when they actually had a fertilizer company inside Louis Dreyfus where they did these barter deals in Brazil. So I spent a lot of time calculating what can you import fertilizer at and what can we then sell it to the Brazilian farmers for.
Wow, so that looks huge and your experience is really amazing. I have been part of the fertilizers industry, not shipping industry, but of course, being the part of the fertilizers, I track the shipping market as everyone does. But it's just, the tracking. It's tracking from outside. What I do, I just watch the rates, read the news, follow the, Baltic Dry Index, how it changes and everything. What I see that right now shipping is struggling across geographies and vessel segments. At least that's how I pick up from the news. And it happens for quite already a long time. Since November, at least last year, the Baltic Dry Index slips very quickly, in fact. And current level is the lowest since I believe beginning of 2023. So could you a bit explain and help understand why is that and what are the fundamentals behind that? What is driving this?
Yes,
when
definitely.
It will stop?
Yeah, that's a more interesting question. I'll start with the economics of it. A ship is an inelastic good. If you need a ship and there is not a ship, you will have to pay up. If you want to move 30,000 tons of goods from A to B, you cannot switch to containers or planes. It's simply too big a volume. And likewise, when you have a ship and there's no cargo, fall price to basically operational cost, maybe even minus I've seen in my career, because you don't have an alternative. You cannot start sailing with containers or oil, you're stuck with it. Currently, we are seeing that play out. The world's largest dry bulk importer is China, across all sizes, all segments, more or less all commodities. China has for the last 20 years been the growth engine of the world. China is suffering. The economic data is not good. The production manufacturing index was weak, but it's a bit stronger. But it's not really there this year. And for the last couple of months, things have been slowing down. Now, China has been on holidays the last few weeks. It is starting to pick up again, but we have been really down to the point where for a lot of owners, it was better to do nothing. And I think without being a fertilizer expert, I think, similar situations have played out in many industries, including fertilizer. When there is an overproduction of something, people shut down plants, they take out capacity, they do what they can. And the same ship owners have tried to do, but they still need to pay back their capital expenses. They have seafarers to pay. So they sail slower, they do longer voyages, they try to do what they can, but they cannot change the demand picture. That's not the owner's job. However, economically speaking, if prices get low enough, it creates demand. If freight was $40 before from, let's say, Baltic to Brazil for fertilizer, maybe we're down to $20 today. Then maybe some Brazilian farmers will say, okay, now it makes sense for me to import fertilizer. And I think this is what we are seeing playing out. It's economic cycles. It's been going on for, yeah, since forever. And that leads to your next question. When will it end? It's a hard question to answer. There is a contango curve currently in freight markets. I think that's logical if you're at operational expense. But what's interesting is that from February value to March values, we're seeing almost 30% increase, 30, which is huge. So right now, it's also back to the supply creation and the demand destruction. We're actually seeing some charters saying, I don't want to buy freight. I don't think this is going to happen. So it's sort of a, let's say, self-perpetuating wheel going on in the markets right now.
I see. And even more volatility are adding all these news that we are hearing, and which are the top ones during the past couple of weeks about the tariffs. So you mentioned that, yes, China being the largest shipper in the world, and potentially it can be hit more by the tariffs from US. It still didn't, happen. We don't understand how it will play finally. But at least the news about that, tariffs to China, tariffs to Canada, tariffs to Mexico, they completely hit the market. So what is your view here? If, let's say, let's assume that it will happen, what is your view? How it will change the freight market specifically?
There are three answers to your question. The first is what has actually happened in, let's say, a futures market. Once the Donald announced the tariffs, very bearish. I think market closed down 5-10% on futures. Then he, let's say, revoked his tariffs. Then it was up 10%. But when you look at the actual numbers, who do USA had a trade deficit with? How does it work? Someone like China did back when Donald Trump was the president the first time around. They already engaged in this type of trade war. And since then, China has shifted more and more of the imports of, say, soybean away from the US and into Brazil. So in some way, I personally think that the reactions to the tariffs is overblown, especially since it was Mexico and Canada, and most of the trade is done by rail or via truck. It's not like the US imports, a lot of stuff by sea from Mexico. Most of it goes over the border. I think what is also worth keeping in mind in this aspect is if the US starts a trade war with China, it's because they want something out of them. Most likely, China needs to buy more from the US. Let's take soybeans. I think it's a very good example, corn as well. If the US negotiates with China that they should buy 5 million, 10 million tons of agricultural goods from the US, as sort of then we keep buying your electronics and you buy our agricultural commodities. This is actually quite bearish for freight markets because it's a much more natural supplier to China. The sea distance is a lot shorter. The other, let's say, countries currently importing from the US would, in a natural environment, actually be the guys buying from Brazil. Last year, we built with the UN as part of our, let's say, digital efforts in the company, a small simulation program where we said, if there was no sanctions, if there were no tariffs, the world was one big happy family, and we traded as Adam Smith intended, what would be the price of delivered agricultural commodities, including freight, compared to where we are today? And we roughly estimated that the world delivered cost of goods for agricultural commodities would be 25% lower because there is a lot of inefficiencies in world trade. Of course, some of the sanctions are due to, let's say, the Russian war in Ukraine. These sanctions are not going to go away. But if everyone was friends, so to say, in the world, the cost for everyone would be huge.
Yeah, that's amazing, actually, as how much we all are losing, let's say, with these inefficiencies. Amazing.
Yeah.
And one more thing which also should influence, of course, the dynamics, perhaps, is the USD. How strong is USD?
Yeah.
We know that it's a major factor for all the commodities. So how it works in terms of the freight?
I think almost you know more about that than me. That when the dollar is strong, people who import in dollar, they can buy less. If they need to buy less, there's less demand for transport. If there's less demand for transport, freight rates fall. And this is also one of the things we've seen played out over the last couple of months. The dollar had been very strong. When you plot it on a, let's say, a regression analysis, we are bang on the line, strong dollar, weak freight markets. Of course, it's not the only thing going on. We've seen scenarios like COVID, where China imposed some very arbitrary rules on vessels and vessel movements and imports and exports, which created this mega surge back in 2021, where freight rates went from, or let's say rental rates for vessels went from $10,000 a day to $40,000 a day. I'm not saying it's only China, there was also a good demand story, but the Chinese response and the amount of supply they took out with, let's say, their rules created this mega boom.
I see. Yeah, thank you. And now understanding more a bit of this economic fundamentals, can you please elaborate in more details how freight cost is being formed in fact? So what are these factors that shippers like myself and my colleagues have to look at in order to find these best deals and these best options for us?
I think depending on your time horizons, you are in essence a price taker. Owners are price takers, you're a price taker. The golden question is, at what point do you take a price and what are you sort of looking at? How is your trade put together? Some markets trade differently than others. Let's say you trade coasters in the Black Sea and you sell wheat into Turkey. It's all a spot market. Maybe you pay $20 per ton, maybe $24 per ton, but it's very static market. Now, if you trade soybeans from Brazil to China, you have much bigger exposure, but you also have a much larger component of, let's say, energy, because the vessels sailing with your goods are coming all the way basically from China to Brazil and back again. So they do, let's say, twice the sailing of a ship in, let's say, for shorter trades, where they generally load closer to where they finish. So oil is a very large part of a lot of freight calculations. If you're going in and out of Europe, you also have a lot of carbon now. You have a lot of new regulations in regards to how energy efficient must the vessel be, etc. I think what's worth keeping in mind is that a freight calculation, on average, let's say from all sizes up and down, around 40 to 50% is the actual market which you trade, and the rest of the freight cost is made up of canal cost, port costs, time cost, all kind of, let's say, cost, which is sort of static. If you go to one ship owner or the other, they're not going to be much different in the time they spend in port, because it's the same ship. It's the, let's say, it's the charter's obligation to load the ship. So they calculate with the same amount of time. So it's about finding the ship owners who has a different market view. And we can maybe segment back to that later, or we can do now. It also sort of depends how big are the ships, what type of owner is it. Let's say it's an owner who really owns ship. They are from Japan, they own the steel, they think of it as good old days, we are ship owners. Then you also have someone like, let's say, Cargill. They control 700 ships, but I don't think they own a single ship. The way they look at it is very financial. So what they do and all their decision making is based off futures curve, because that's where they go to lay off the risks. Whereas a Japanese head owner, he bases his decision making off, how can I lay off my ship for 7 years to a Danish or Swiss company? So the time horizons, what they're looking to achieve is completely different. And that's also, despite both being price takers, both might be open in the same market, you will see very big differences in what are they trying to achieve, and therefore what are the cost or the price that they're offering you.
Thank you. As a usual shipper, Of course, I don't have all this information, all that rich, knowledge that you have. What I usually do as a normal, guy who tries to ship something from somewhere to somewhere, I usually call my agency who helps me with that. So of course, I cannot, control, or I don't have any information if the ship or the vessel that will carry my goods will be the one with this strategy or with a different strategy. So what do you think in terms of me as a usual shipper? How should I approach? Should I rely only on my agency that can help me with finding the vessel, or maybe there are some other strategies in the market which you can recommend?
I think it very much depends on the cost of what you're trying to do, what you're transporting, how far. Look at it as a bit of a procurement decision. Okay, I need to go out, I need to buy something. There are some economic fundamentals to a market. There is a cost of my time. Maybe your time is better spent trading fertilizer futures. Freight is just, a byproduct. Maybe your whole trade depends on you being able to deliver commodities to an end user, then you need to spend more time on freight. You perhaps need to also engage a freight broker, maybe even the best one, pay him extra money, because even if you pay him $1 per ton, he will get you three back. And it's hard to do a one size fits all. Some customers, let's say Vale in Brazil, they have one flow, China, just like millions and millions of tons. Their strategy is very different from, let's say, a German processing plant buying and malting barley to create beer, to make beer. And depending on who you are and what you're doing, it's different. If we go back to the traditional, let's say you are Cargill or you are someone who's a bit smaller, someone like Cargill, they will use financial instruments every day of the week. They want to create this big book, they trade around it, they have some of the best people in the world. It's quite amazing, what they can achieve with that. But then on the other side, if you just own one factory and you need to move something from A to B, then maybe setting up all kind of financial accounts, doing all kind of risk management, it's maybe better to just go to your local freight forwarder or ship owner and say, can we do a contract? I'll ship once a month. I'll pay you 20 euro per shipment per ton, and then we're done. And I'll nominate you a cargo a month, and then, we both work this out, a little bit of flexibility, we know each other. And then you have everyone in between who sort of do a bit of both.
Right, right. Thank you very much. Mads, now I would like to move to another topic, which I
Yeah.
know your company is very, very active in and actually is pioneering, I would say. And this topic is technology. So we are living in the era of new technologies that come into our lives, that come into our industries, and they change the operations and they change the future of our industries. In fact, first of all, I mean all these, digital tools that help to organize ourselves and increase productivity, including AI, which is also the hot topic of last days. Fertilizer industry in this respect, I would say, lags a bit behind. Technologies are not entering our operations very quickly. And how about shipping? How about freight? Is technology reshaping the freight trading, especially with the tools like CM Navigator? Can you tell a bit more about that?
I think that where AI discussion should start is what type of AI are we talking about? Like this Gen AI, like ChatGPT, I use it to draft some emails, I use it to various stuff. I still think it's mostly a fun tool, but I haven't seen like a really good use case for it, in a business where you replace your operations or executions with Gen AI. I have not seen it and I don't really believe in it. However, what I have seen and what we are pioneering, if you may say, is mathematical AI, where you use machine learning, use algorithm, you tie 40 of them together, and it sort of becomes a flywheel where they work together. Now, Copenhagen Merchants started as a grain brokerage. And as we've grown over the year, one of the challenges we'd had is to keep up with freight rates globally. Basically, we are trying to see, can we put the puzzle together faster than Cargill? Because then we can call them and have a proposition for them. And if they say no, we can call Bunge or Dreyfus or whoever we've talked with. But if we're always two steps behind the ABCD companies and Viterra and whoever's out there, then you don't have an existence. Then we need to, find something else to do. Now, luckily, we sit in a situation where we already have a ship owning arm, so we have access to a lot of data. We have a digital company. As mentioned, I used to be in Dreyfus, where I helped build this mathematical AI for Dreyfus in order to calculate everything everywhere. So right now, for grain markets, we have an AI who does 600,000 calculations every night for every conceivable route between Greenland to Australia almost. Every ship size, everything. Because what we find is that when our grain brokers start calling around, having the ability to filter down commodity, load port, discharge port, different type of terms, in 30 seconds, they can call their customers with something and say, I know this will cost this for you. Should I help you execute? And that gives us an edge on the other grain brokerage. It also means that in the grain markets where there are perhaps 6 global companies, ADM, Bunge, Dreyfus, Cargill, Kofco, Viterra, maybe Olam, so 7. All the other 200, 300, 400 companies, they're always a little bit behind if they didn't have a tool like ours. So what we said is, you know what? It's actually better to democratize it because then we can be part of the conversation of 300 companies instead of just 7. And this we have received tremendous good response on. And one of the funny things we found is that it actually also creates much more time for our, let's say, all employees, because you don't have to sit and do all these Excel sheets. You can call your customers and actually spend time. Hey, what's on your mind? What can I do? Are you worried about Donald Trump? How can we work around this? Should we have a backup strategy? Should we, what can we do here? And so this has been a very positive story for us.
Yes, thank you very much. I think it's a great job what you're doing, and hopefully more and more clients from grains, from fertilizers, from all related businesses will pick up this trend, because indeed that saves us time for much better strategic thinking. Let's get to the topic that you already touched a bit, but I think it's another very hot topic across the industries at the moment, and it is related to the environmental regulations. So yes, you mentioned indeed that environmental regulations, specifically like regulations from EU, are becoming stricter, but at the same time, many industry players indicate that they will influence unequally players in the different part of the world. What is your view upon that? How do you think these changes will shape the freight industry?
If we start with basic economics, it's basically just a tax on people doing stuff in Europe. So Europe loses competitiveness. Things are not great in Europe already, but now we get another thing to fight with.
Yes.
So let's say that some of these, let's say the average of these regulations is a 5 or 10% increase in freight cost. Now, if we know China is the biggest importer, then 10% extra on the cost all the way to China is a lot of money. Like you don't have to be a PhD or professor to know this actually has a price. Now, what we are using the money for here in Europe is to build windmills and to make ourselves sustainable and all that. Now, if you look at the 3 major shipping segments, tanker vessels, container, and dry bulk, you have in container, you have an individual charge per container. I'll not say it's small, but it's sort of, if you have 20,000 containers divided with, 20,000 customers, then the numbers are not huge individually. If you look at tank ships, they have this, let's say, magic feature that they can go to straight outside of Europe and perhaps transfer some of the cargo and then save on it. There's been some arbitrage done on that, and there's been some media on it as well, because it is abating the rules, but it's not illegal because that's not how they made it. In dry bulk, we don't really have any of these options. It's often just a sole buyer on the cargo. And if you were to stop, let's say, between Brazil and Europe in Morocco, the cost of unloading the cargo, loading it again, finding a new ship, all that would maybe add $10, $12 to the calculation. Whereas if you just pay the EU ETS or the carbon fines, it's maybe $2, $3. So it doesn't make sense in any way economically. It will increase in price. So let's say a trip from Brazil to Europe will maybe go from $2, $3 now to $5, $6 in 2 years, which will go into the European Union's Green Fund. I know that China is looking into creating a carbon market as well. They have actually also for a long time had very strict rules on what type of fuel you can burn in their ports. So they are getting increasingly environmental in China.
I see. Thank you. And how do you think all this will influence the industry in terms of, size of the players? Who will be those companies
I
and
think it will, yeah,
will
it will definitely
change?
lead to consolidation. We are already seeing it now. It takes a lot of manpower to actually manage this because the way you trade these carbon credits is you have to set up financial accounts. Now, a lot of ship owners have had their companies in, let's say, Panama or Liberia, at least on paper. And it was very, let's say, simple operation. Now they need to be financialized, they need to be vetted. Not only do they need to go onto financial markets to buy these credits, they also have to set up special accounts with the European Union. I done that here, and it probably took me a working week out of my year last year. It was horrible process. Website horrible, user interface horrible. It was not a great experience. And I sort of, I knew I had to do it, but if you're sort of a marginal player, you're sitting maybe with an office in China, Taiwan, you're like, well, maybe we just stay away from Europe. Maybe there's no need to go there. It's too cumbersome. We've seen the same in the US, where they have very strict requirements for what type of ballast water can you take on board and where can you, let's say, pump it out into the ocean. Some owners simply say, we don't go to USA, too much trouble. It sounds weird that people would leave money on the table and not create these trading opportunities for themselves, but it's happening. One of the good things, though, is this consolidation also leads to efficiency. This and who's benefiting from efficiency? The people buying the goods, which is ultimately you and me. So as an industry player, competition is becoming more fierce because there's getting fewer and fewer, bigger and bigger companies fighting over let's say these days it's scraps. But in the end, it's creating a more efficient market.
Yeah, hopefully it will not be too small number of players finally in the industry.
Well, if you look at the
Hopefully,
way I generally tend to look at it is in containers, they're 20 years ahead. You have maybe, I don't know, 5 companies controlling what, 80% of world tonnage, super digital, super big. It cannot be more consolidated almost. Then you look at tanker business. They're maybe 10 years ahead of dry bulk. Also quite consolidated, quite big companies, especially the oil majors run very large fleets. In dry bulk, Cargill and to a certain degree Dreyfus has ventured into a lot of this operating, but otherwise it's still very fragmented. There's a lot of players still. Okay, the average owner has grown from maybe 2 to 6 vessels, but the large guys have taken a very large piece of their pie over the years. And I think this is an unavoidable consequence of larger and larger overheads. It creates opportunities to save money if you put together a back office. Because
right.
even if you are one owner or 10 owner, each of them needs a resource to manage something like carbon emissions. And whether you have 50 or whether you have 100 ships, it's the same job. The numbers are just bigger.
Yes, indeed, indeed. Thank you. You mentioned one word, financialization, which I would like to discuss more a bit.
Yeah. Yeah.
So indeed, this is another trend that is very important for all main commodities, clearly. It is one of the key market drivers, actually, in basic commodities. For fertilizers, it's again, because we're a bit lagging behind, it is just entering step by step our industry. And of course, it starts driving the industry clearly as well. How it works in the freight. Can you please explain how this financialization is shaping the market? Is it an important driver already
Yes.
or not yet?
Yeah, there are a few things going on, but I think there's a very good parallel to fertilizer, where you also saw, was it 5 or 10 years ago, a lot of the producers starting to become traders themselves. And if you're a trader yourself, you need access to financial markets in order to cover your risks. The same is going on in freight markets. Some of the, let's say, Greek owners or Japanese owners are starting to say, hey, why do we rent our vessels out to Cargill, to the people in Denmark, to the people in America? Maybe we should be the one trading these vessels. So these owners are entering the financial markets themselves. You have the financial knowledge that someone like Cargill had 10, 20 years ago is being spread out. Employees leave, they take good ideas, they go to a Danish company, they go to a Spanish company, etc. So good ideas spread. And the great thing about, let's say, financial products is it allows you very fast to cover your risks. If you have to go out physically and cover, let's say, the output of a urea plant for a year, it will take you a long time to line it up and all the risk and all the considerations and the framework contracts. And it's a bit the same in shipping. It takes a long time to execute, plus you have to give away some of your flexibility because as we've seen over the last couple of years, the world can change very quick. So if you suddenly want to be long instead of short, you just go back into the financial markets, you buy, and you are positioned the way you like it. One of the, let's say, another key element on top of this, let's say, physical need there is from ship owners to become more traders themselves, is that there is a more strict focus on risk management. What you had for many years in commodities and what I saw when I was in Dreyfus is something I never heard any ship owner talk about it that way, but I do these days. Nowadays, more and more ship owners work with value at risk. How much can we lose? Can we do a stress test? What if market goes to 4,000, 5,000, 6,000? How do we manage our cash flows, etc.? And if you have these models, you need also something to, let's say, back test them again. Something where you say, well, now the models show something I don't like. What do I do? And then you have two options: go to physical markets, go to financial markets. So people who are already a little bit financial are now becoming super financial. So these two drivers from the, let's say, real world are pushing volumes up and up and up on freight futures. But what you also have is America, and it's, let's say, almost unlimited like for trading everything that moves. So over the last couple of years, we've seen many hedge funds from America into the freight space. I saw a graph a few years ago that freight futures was the most volatile product on the New York Stock Exchange in terms of percentage. So if you're some sort of a hedge fund manager in Manhattan, this is what you like. You like to trade big volatility, and freight can give you that. So I think right now, something like 40 to 50% of all freight futures traded are financial institutions. Then you have about 1/4 that is charters and 1/4 that is ship owners in traditional sense. But a lot of the volume come from hedge funds. I don't know if it's the same in fertilizer markets.
Not yet. We are still more, in the beginning of this way. We're not there yet. So as I said, we're a bit lagging behind as an industry. But yeah, it's very, very quickly developing, I would say. Can
One
we?
important
Yeah, yeah.
one thing that's also worth mentioning about freight, because I call them futures, but in reality, it's a swap. You cannot buy a freight future/swap and then get a ship delivered. It's always settled on the average of some sort of index somewhere in the world. So you can have a financial volume that's 100 times the physical, but you cannot actually forge conversions, which you can do in, let's say, grain markets. If you buy a lot of the Matif futures and you sell a lot of somewhere, sooner or later they will come together. This will not happen in freight markets.
Exactly, that was my next question. Can you maybe a bit explain how these freight forward agreements are organized, how they work, how they are actually formed and
Yes. They are a market which still operates with physical brokers. There are a handful of them in the world large enough to cover globally. They often have a physical shipbroking business on the side. A lot of them are based in London or Dubai, which is natural centers connecting to Manhattan one way and to Singapore, Beijing the other way. It's a swap market, as I mentioned. And basically, it trades via WhatsApp. It sounds a little bit unsexy, but that's how it's done. It's also a market that's global. And this is something that's maybe a little bit different to freight markets compared to many other futures market. So if you have a sugar future, where it will be delivered is, that it specifies 3 different delivery points around the world, and this is where you could get your future. What freight markets do is they take 10 routes globally, one from China to Japan, one from Singapore to India, one from Africa to Brazil, wherever it might be. And then the ship brokers collect values for all of these routes. What is it today? It gets sent into, let's say, an auditing government body called the Baltic Index. Nothing to do with the Baltic region, it's just Baltic Index. And they average out all of the numbers. So if you have a market that's $15,000 out in China, $5,000 in Brazil, and $10,000 in the US, average 10,000. And this is what you trade. So if you're a large global player, you have an advantage because you have physical access to all of these routes, which means that as soon as a deal is made, if it's below the index, you can sort of report that in your, let's say, system in your company. This creates quite a lot of, let's say, interesting dynamics because financial players don't necessarily have this, but they have computing power the size of Elon Musk. And this drives sort of from where I sit, they drive a lot of volatility because it is a bit of a tug of war between financial players and physical players.
Yeah, indeed. It's the nature of the business, I think, a bit,
Yeah.
which drives this. Yeah. Thank you very much for this amazing discussion. And to finalize it, I would like to ask you, how would you recommend to approach us, usual shippers, to approach the freight market? What to watch, which parameters to watch, which signals to catch in order to be always on the wave and to understand how to reach your goal, actually?
I would say first, you need to be maybe not directly in it yourself, but have someone close. You cannot be co-brokering or have, someone talk to someone who talks to someone. You need someone who can call and act on your interests. If you want to look at signals, and let's say you buy some sort of data platform, most obvious one to monitor is supply. Vessels are luckily easy to monitor because they have a satellite transmitter that must be turned on at all times due to safety reasons at sea. So I can log on right now if I wanted and tell you how many ships are in the Black Sea, how many ships are in Brazil. If you then plot that on a, let's say, a 3 years curve, you can probably see are we at a high end, low end, etc. Demand is more tricky, but the good thing about, let's say, doing dry bulk is there is often a seasonal tendency to it because, especially here in the Western Hemisphere, crop seasons matter a lot for the volumes going out of ports. Whereas you can say in Indonesia, whatever, they pump out coal and they do the same in Australia for iron ore. In Northern Europe, in the Black Sea, it's very dependent on when is the harvest season. They also have a very big harvest season in Brazil for smaller sizes. And I think those, supply and then harvest season is a good proxy if you only want to spend, let's say, 15 minutes getting updated. Yeah, I think in the end, if I'm gonna, do a little bit of a selling here, if you want to calculate real freight rates, go to cmnavigator.com and see it. It's free to try, and again, no strings attached. It's built for agricultural commodity traders. Many of the flows calculate similar to grains, fertilizer and grains. So yeah, this would be my, let's say, my sales pitch. Otherwise, the more easy solution: monitor some ships and monitor some harvests.
Thank you very much, Mads. It was amazing, very, very insightful discussion. I'm sure that many of guys who are watching you now would like to see you again because many more questions are left. So I would be very glad to host you again. And thank you. Thank you for your time.
Yeah, thank you too, and feel free to connect with LinkedIn and send any questions my way. I find it quite interesting to engage, let's say, out of the bubble here in Denmark, where this sustainability and whatnot has not really been questioned. But sometimes when you go out into the world, not everybody agree with our Scandinavian view of things.
Yeah, your view is ideal. We would love to be there. But yeah, it's a way to go for all of us. Thank you very much. Thank you for watching. As usually, I will leave all credentials of Mads and Navi merchants in the comments. Please let me know in the comments what is your view when shipping cost will start increasing again. Also, please let me know in the comments which other questions related to shipping you would like to uncover, and I will be very glad to do that with Mads next time. Please subscribe to the channel, put like to this video, and see you soon.